Welcome to the March edition of Drinks with Darren. Now we're in a little bit of a different environment here. I've got my good friend and one of the smartest guys I know, my own personal accountant, Jimmy Le-Tang of Jimmy Le-Tang CPA. That's the name, right?
Yeah.
All right, so we're in Burnaby today, and what we're going to do is not only are we going to try some awesome local drinks, as we normally do, but we're also going to hear a little bit from Jimmy and what's going on in the tax world, things you need to know to help you make better decisions. We don't want any surprises coming along for you if you maybe bought, sold last year, or that's your plan this year. Jimmy's going to give us some real-time advice or some real-time information that's going to be useful to you. So, Jimmy, are you okay with that?
I am absolutely okay with that. I'm excited about it. So
all right, we're both excited. Not only we're excited, but we've got some awesome Stanley Park Brewing Day Trip West Coast Lager. I've never had this. Have you had this?
No, I've never had.
Okay, so what I'm excited about this is Jimmy likes his beer in the lighter shade. I don't usually drink lighter shade beer, so I'm excited to try this. Jimmy's looking forward to drinking in the middle of the day, he told me earlier. But we're going to try this. We're going to let you guys know what we think, and we're going to go from there.
All right. Cool.
And what I'll do...
Wow, it's cold too, buddy. Yeah. Good work.
Oh, that's not really in focus, so that won't work. All right, so here we go. Cheers, mate.
Thank you. We shotgunning this?
Yeah. Give me your keys. Here we go. I like that. Jimmy's office, so we need to make sure we use coasters here. What do you think?
Fantastic.
What I taste a little bit of fruit in that. It's easy to drink. That's a great. That feels like a hockey game kind of beer to me.
This is a fantastic beer. It's nice and light. I'm not much of a beer drinker, whatever. So this is actually really good. It actually is quite tasty.
It's so good. I'm going to take another sip.
It's very good, actually. I'm pleasantly surprised.
Well, that's good. Stanley Park, you did a good job. So we'll make sure we have a logo on that video somewhere where everyone can see what we're drinking. All right. So I'm curious, Jimmy. If I bought or sold a home last year, what do I need to know?
Well, it kind of depends. Are you a first-time home buyer or not? So if you're a first-time home buyer, you still have available to you the federal first-time home buyer grant, and that's worth up to $750.
That's right. So that's something that's been around for a little while now.
For a little while, yeah.
So that grant, if I'm not mistaken, is you want to put that towards whatever your total income is to bring down the amount of tax you pay. Is that right?
What happens is on one of the schedules, you get a $5,000 tax credit. Multiplied by the 15% lowest tax bracket, that's how you get the $750.
Okay,
so it's a non-refundable tax credit, though.
It's a non-refundable tax credit.
Right.
Okay, so we want to make sure that anybody that did buy a home last year as a first-time home buyer, you are not leaving money on the table because there is some money to be regained through refundable tax money.
Absolutely, absolutely. And then also, if you're a first-time home buyer, there's an exemption on the property transfer tax as well. There are qualifying criteria for that, but your lawyer or notary will be able to walk you through that part.
Okay, awesome. So if you have any questions about that, we'll make sure all Jimmy's information is at the bottom of this video, so you can reach out to him if you do have any questions. Is there anything that anybody else that bought or sold last year needs to know?
On the selling side, yeah, absolutely. Yeah. So we talked about this last year, but also we'll mention it again this year, is if you're selling your principal residence, the principal residence exemption is not an automatic claim now. You actually have to make an actual claim for it. So if you're selling your principal residence, you got to make the claim for it. That's what makes it non-taxable.
Okay, perfect. So, Jimmy, what if I am thinking of buying a home in 2018? Is there anything I need to know?
Yeah, so there's been a couple of tax changes in 2018. You know, especially for the higher priced homes, we got an increase in the property transfer tax for homes worth more than $5 million. That's
right.
There's a bump from 3% to 5% on the amount in excess of that.
If any of you are buying homes for over $5 million, you better be calling me. Anyway, sorry.
Oh, absolutely. And in addition to that, if you already have a home, there's a school tax increase. So you'll be paying more money for anything that's worth over $3 million on the property tax as well.
Okay, so a lot of that, what I'm hearing, is it's stuff that's going to affect the very high end of the market. What about people more in the we'll call it the affordable range? Let's say $1 million less. Okay. What kind of stuff, if any?
$1 million less in terms of direct taxes, not right off the bat, but there is a thing called the Vancouver vacancy tax. So that's right. Specific for your Vancouver properties, if you're buying, you want to make sure, especially in 2018, the tax would have been in effect for a year already. So you're going to want to make sure that you get an idea as to what the seller has reported. And if they've reported that it's been occupied, you want some sort of proof of that, I guess. It's kind of up in the air right now.
Yeah, and one of the crazy things that Jimmy will let us know about as well, or I guess I can just say it too, is you need to make sure that is being dealt with by the seller, because if the seller does sell a property in Vancouver and they haven't addressed that money owing can actually fall back on the buyer, which is terrifying. So you need to make sure you're doing your homework and addressing that appropriately.
That's right. The property taxes follow the property, not the individual.
That's right. Yeah. So there you go. If you're buying a property in Vancouver, remember that. What about anybody that might be selling their house in 2018?
You know, in selling, there's not a lot of issues with regards to selling, other than the fact that you've got your principal residence exemption, right? If that's available to you. If it's a rental property, I mean, you're going to be paying, you know, capital gains taxes on that anyways, or taxes on the capital gain. So on the sales side, there's really not much different.
So Jimmy, tell me, now this is an interesting question. I know we talked on the phone about this. Tell me, if I have a principal residence that has a suite in it, am I going to now have to pay capital gains when I sell that home, or is that dependent on a few factors?
Oh, the wonderful answer is always, it depends.
It depends.
Right? It depends. It depends.
Guy knows his stuff.
So your primary residence, if you haven't done anything to your primary residence to make it more rentable, right? Like, for example, structural changes, adding in a door to make a separate entry, for example, then the primary use of your property is still your principal residence.
Okay.
So therefore, no change in use. When you sell your property, it's still your principal residence, and the secondary use as a rental property is secondary. So therefore, the CRA allows you to not pay taxes on the capital gain for that.
Okay, that's great. And I think what a theme of this would be is you don't necessarily always want to make these decisions or assumptions yourself. You want to talk to a person like Jimmy and get his opinion on it, because you just want to make sure you got no unexpected surprises when it comes time to sell. Fair?
Absolutely, yeah. Very fair statement for sure.
Okay, so Jimmy, maybe can you help everybody know, outside of real estate, has there been any tax changes that you want these people to know about, whether it's family related, business related, anything like that?
Yeah, absolutely. There's been a few changes. So the federal children's fitness tax credit's been eliminated for 2017.
Okay.
But you still get that credit on the BC side, so hang on to your receipt still. And then in terms of the arts credit, again, the federal side is gone, but the BC side still has the children's arts credit. So again, hang on to your receipts and make sure you claim those.
Okay, perfect.
And then with regards to if you got kids in school, the education tax credit was a nice bonus. That's been eliminated on the federal side. And the provincial government, the provincial government will have that kicking around for another 2 more years. So 17 and 18 will be around, and then 2019 the education tax credit will be eliminated.
Oh, okay. So there's probably a lot of people watching right now that do have young children, so that's something you guys want to pay attention to. And again, you don't need to get into the details or take your details necessarily from this video, but you definitely want to reach out to Jimmy or your tax professional. I recommend Jimmy, or your tax professional, and get this information directly. Right?
Absolutely.
Cool. What about personal corporations? There's been some changes around those, income splitting. That might not be for everybody on this video today, but real quick, is there anything that people should know about income splitting?
Yeah, absolutely. So if you run a privately controlled Canadian corporation, whether it's a service business or a manufacturing business or otherwise, and you plan on paying your spouse by way of dividends, or your adult children by way of dividends, there are new rules put in place to limit your ability to split that income. So my new general answer is to the question, can I pay my spouse or my kids? The answer is, well, probably not, but it depends. And what it depends on is whether or not your spouse or your adult kids meet one of the 3 exemptions. So if they don't meet one of the 3 exemptions, and you pay your spouse or your kids, that income is going to be taxed at the highest personal marginal tax bracket.
Right. So I've got a 6-month-old son, so I can't pay him right now.
Oh, never. So that's never changed for anybody 18 or under.
Oh, too bad.
Yeah. So 18 to 24, there's a whole different subset of rules, which are even more strict than previously. Okay. And then for 24 or over, it's a little bit more lenient, but still a lot more restrictive than what it used to be.
Perfect. Okay.
Yeah.
Let's do some statistics. How's that?
I love stats.
Yeah, the accountant likes stats. Imagine that. All right, so now we're going to get into some statistics, because we all know you love statistics and you want to know what's happening with your investments. So my good friend Jimmy here is going to help us with those. We've got the answers right in front of him, but he does like his stats. He's an accountant. I like numbers too, so let's have some fun. Okay, so for those of us in the Fraser Valley, we're all wondering what's happening with our detached homes. Jimmy, what has detached homes done in the last month?
So in the last month, looks like it's gone up by almost a full percent actually over the last month.
Which is pretty good. So I think that's a little bit above where it was kind of trending previously. And in the last 3 months?
Almost 2%.
Awesome, almost 2%. Okay, what if I own a townhome in the Fraser Valley? What's it doing?
Over the last month, it's 2.25%.
2.25%. What about the last 3?
And the last 3, just a little over 5%.
A little bit of 5%
awesome.
increase. That's pretty incredible. So if you've bought a townhouse 3 months ago, you were smiling ear to ear. Now the big one, as it has been very frequently for the last little bit, condominiums. If I own a condominium, what's happened to it in the last month?
You're laughing all the way to the bank. It's 4.5% over the last month.
Wow.
Yeah.
Okay.
And the 3 month stat is 12.12%.
12.12%. So we're not going to get into the theory behind why these numbers are doing this. We've done that in previous videos, but if you do have any questions about why or what's going on, always feel free to reach out directly, and I'll let you know. I'll fill you in, because I want to make sure you guys are very well informed. That's it for this month's Drinks with Darren episode for March 2018. I want to thank my guest Jimmy Le-Tang from Jimmy Le-Tang CPA. How can they find you, Jimmy?
Oh, you can reach me on just go to my website, jltcpa.ca. or jimmy@jltcpa.ca.
Awesome, and we'll have links for all that at the bottom of this video, so you're able to find that. One or a couple more things I want to let you guys know. Feedback on the videos. Let us know what you do like, what you don't like. Where should we go next? We usually try really cool restaurants around town. We're sitting in Jimmy's office today because we want to get some great advice from the best accountant in town, so that's awesome. Let me know where you think I should go next. Please share, comment on the video. Let us know how we're doing. We want to make sure that we're bringing value to you guys and you're getting the information that you need to make good decisions about your real estate investments. As always, the statistics are attached below as well underneath Jimmy's information. And again, I want to thank you for joining us on Drinks with Darren. I look forward to seeing you next month.
Thank you.